Hello, this is Manesh Patel from ichimokutrade.com. Today is June 4th, 2012. This is our weekly Ichimoku analysis for the futures markets, where we cover everything from commodity futures to crude oil to natural gas to lumber to cotton, lean hogs, sugar, you name it. We pretty much cover it. Okay, let's begin. This is our normal disclaimer. This is for educational use only. All charts you're going to see are basically from Thinkorswim from TD Ameritrade. Here are my contact details here at info@eiicapital.com. If you want to reach us in any of our global offices, here's our contact information there. Also, you can access ichimokutrade.com for any of our free videos on learning how to use Ichimoku, access our email services and heat map services and everything there. Okay, so let's begin. First thing we're going to do is we're going to go to our heat map and look at that. And remember, we have email alerts that basically trigger on this, especially for multiple time frames too. So what we're going to do is we're going to look at the daily and the weekly time frame, because these videos are more long-term basis. Okay, red basically means you're betting on it going down. Green basically means you're betting on it going up. What you're looking for are basically twos and fours. Twos and fours are opportunities to start getting into a trade. If you get a 5, it's basically probably a little too late, and if you get a 5 that's yellow, that means definitely it was too late. The trend has already occurred, and it's too late to enter the trade at all. And so what you're looking for is basically twos and fours on the daily time frame, and 2 4s and 5s on basically the weekly time frame. So if you go down this list here, basically soybean oil is basically oversold on daily. Still, it'll probably say change sentiments on the weekly time frame. There's nothing here on corn for multiple time frames. It's an opportunity here on the daily, but basically not an opportunity on the weekly. So this is probably counter trend here. And if you keep on going down, this is basically overextended. All of you here, these are all trends that have already occurred. Already here. So it's too late to already enter them. So, you know, if you've been looking at the heat map and the email modules and getting alerts, you are basically seeing that cotton, the dollar, as the S&P futures, so pretty much the U.S. markets are pretty much being sell scenarios for a very long time, and the trends are pretty much now overextended and should be coming close to an end. Here's another one, Treasury notes. Heating oil is overextended now. This is pretty much overextended too. Coffee, live cattle. So there, if you look here, we're pretty much in an overextended scenario for majority of the futures right now. So there's no real opportunities this week right now. But you know, these were opportunities that have happened over the last couple of weeks that you should already be in, and you probably, if you are, should be tightening your stops and moving forward. But let's start analyzing everything. Remember, on the left-hand side is basically the daily time frame. Right-hand side is basically the weekly time frame. So let's start from the futures in the very beginning and just scroll all the way down and start going from. Let's go to cocoa. Cocoa here is basically consolidating here. Nothing really going on here. However, if this cocoa can sit there and break this 20008, this does have a potential of starting another downward trend to the bottom side. Okay. So definitely look for that. However, remember, you've already had a trend here, and then you have a consolidation pattern. Now, how far it's going to go, no one knows. I don't have enough history here to kind of go back more to see what the next support level is going to be. And let me just verify that. Well, actually, you do. So if it breaks that level, it's going to actually, next level is going to be here, which is 1878. So that's going to be the next level that you can sit there and play to. So, you know, if you look here, there's not much profit here, and the risk that you're going to take, remember, this is a weekly time frame. That's not good money management at all. And you know, these are trades that you should not be taking, because there's very little profit here, but a lot more risk when you take this trade on. So if you sit there and take a reward risk ratio that's inverted, you're basically going to dig a hole, and it's not worth it. So if you believe it's going to break 1878, then you could take it, because then you could get a better reward risk ratio. But otherwise, this does not look good, and it looks like it'll probably get to 1878, but after that it may stop. We'll have to see and monitor this one. Crude oil, if you look here on the crude oil, these blue lines are just telling you when the contract ends, because This is what we're looking at, a continuous chart here. But daily time frame has basically been trending here. If you look here, look at this big move down here. That's a huge movement in last week, and it's very, very overextended right now. As you can see from up here, we definitely need to pull back to the up. The resistance levels are going to be 86.31, and the next one's going to be 83.82 moving forward. Cotton. This has been a great trade that we love and we've been in. This is a downward trend here. Remember, we've been talking about this on the weekly videos a lot since May. Actually, since April, we've been saying watch cotton, and finally in May we got the opportunity and it triggered. And this has been going down, 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 down. It's actually getting close to its next leg here, going down. If you're in this trade, I would definitely take your profits and run, or tighten up your stop, because it looks like this is going to end very soon. Remember, this has been a big movement down, and there's not much selling that could take place on that one. US dollar index, this has been bullish trending, as you probably heard on the daily time frame. We're seeing on the weekly time frame this is trending too. However, we are in an oversold scenario right now, where this thing does need to get a pullback. It needs to either pull back to about 82, or if the best pullback level will be right around 81.16 if it can. Let's see. Now we're going to move down. We're going to come back to the gold futures in a minute. Let's cover the meat stocks, feeder cattle. This is still basically trending here, but this is consolidating here. But the weekly is basically trending here. This is a dangerous one to get on, bet on, and going up, and you could see from the big gap here too. So I would definitely not be entering this unless you enter with options. But trading the future contract, unless you're using it for hedging, I definitely would. But speculative, definitely look for options, not even deal with the future on that one due to all the gapping that's occurring. Lean hogs, nothing really going on there, so we're just going to ignore that one. Copper futures, this has been going down, down, down. Remember, we've been telling you to watch copper futures, especially when it got to 3.6. When it got to 3.6, we told you to watch out for this one, because this does have a potential going down. This is at a major support level right now, which is right roughly around 3.2. It needs to pull back to roughly about 3.5498. Once it gets to that pullback level, it's going to be interesting to see exactly what happens, but definitely keep an eye on this one moving forward. Heating oil has been basically breaking down on the daily time frame. Weekly, you could see here, broke the support level here. That's going to be the next resistance level now, which is 2.7035. Ideally, you kind of want it to pull back to about 2.8871 to kind of reduce the risk and get a good reward risk ratio if you're looking at reshorting this thing. But the sentiment has changed for heating oil now on a long-term basis to be bearish. Coffee, this has been a great trade for the entire year for us. For coffee, where it just keeps on going down, down, down. I'm sure Starbucks is loving it, that its coffee prices are getting cheaper from the supply side. But anyways, if you look at this, it's still going down, down, down. Next level, believe it or not, it's at a major support level right now, 154.58. If it breaks that, then it can sit there and go lower. And there's a lot of minor support levels now dating back to 2009. So, if you're in this trade, I would definitely take profits or just keep your stops very, very tight. But I think the trend over here for coffee is getting to an end very soon. Lumber, really not anything going on right now on the daily. On the weekly time frame, this thing has got to sit there and take off in the next 2 to 3 weeks. And break 298. If it does break 298, this thing is going to start a trend and go all the way to 330. So keep an eye on this one. This has a time limit of 3 weeks expiration. If it doesn't get there and start breaking at 300 in 3 weeks, this thing's going to tank hard and probably will sit there and tank for another 2 or 3 months and get back down to about 256 moving forward. Live cattle, really nothing going on there. It's boring. It's trying to get to its resistance level at 121.338. Natural gas, this is the one everyone's been looking at. Well, natural gas had a bottom, then it came back up. Its sentiment changed to be bullish. It's at a major support level right now, 2.331. Interesting thing is what's going to happen here. If it holds here and then breaks 275, this thing is going to start a trend to the top side. It does have a potential going back to 3.30. So we have to wait and see what's going to happen right now. But it's in between two different worlds right now, where the support side is basically at 2.331 and the resistance level is going to be basically around 275. Whichever way it breaks is the way it's going to go from this point on. Frozen concentrate orange juice. Remember, we've been telling you to watch out for this one. This has been basically doing bearish for a while, and look at it, still going down, down, down. Starting to trend down here, straight shot down, just like all the commodities. Retrace pretty much majority of this move here. I don't think it's done yet. I think it's still going to keep on going down a little more, possibly all the way here to about 88.46, but time will tell. The major resistance levels are going to be 122.85 and 127.50 moving forward. Palladium, really nothing going on here. This is bearish trend here on the daily time frame, weekly time frame. Basically, there's nothing going on right now. However, this thing is setting up to be bearish, and I'll definitely keep an eye on this one. If you could get a pullback to about 635.23 or about I would say about 655, then I would look at maybe trying to go short this at a pullback level, but keep your stops very, very tight. But this thing does look like it can break down, and the other way you could do is a breakout trade where it breaks this pivot here at 383. If this thing breaks 383, this is going to go lower and start a trend to the downside. So it'll be very interesting to see exactly what happens here. The 635 is a key level, I think, that has to hold. So we're looking at a pullback level to 635 to short this, with a very tight stop to go down. Platinum is basically bearish trending on the daily time frame. On the weekly, you could just see it's one big volatile consolidation pattern. This could look like a double bottom to some people, but this is trending downwards right now. It needs to equalize. If you could get up to about 1483, get there, hang out there, and then kind of sit there and start going down again, this can move down to a whole new leg downwards, but it's asking a lot for it. Gasoline's been a nice one. It's bearish trending on the daily time frame. Is in desperate need of a pullback on the weekly. The pullback level that we're looking at here would probably be right around here at 2.9416, where we're looking for it to pull back to, which is about 30 points, well, less than 20 cents up. Sugar, this has been another great trade, going down, down, down. You could see it's still going down, down, down. We're looking for it to get to about roughly about 18.17, so a couple more points, and I think at that point this thing will be pretty much over. Let's go to gold. Gold here has been pretty much, there's nothing on the daily time frame at all. On a weekly time frame, this gold did have an opportunity for the last 2 weeks to break down and break this major support level here at about 15.25. However, it has not taken this opportunity at all to break down. The more it doesn't sit there and break 15.25, the less the bearish is this going to become. Momentum's running out to basically for the bears. So this thing has to sit there and tank very, very soon. If it doesn't, if it breaks above 16.58 and then goes above 17.03, this thing can sit there and start a long-term trend on a long time frame. But remember, it's got a long ways to go before it can do that. Silver is a different story. On the other hand, it's still hanging around its support level right now, and does look like in about about 3 or 4 more weeks, if it's hanging around this level, it can sit there and automatically break down this level to 26.67. So this would be a good pairs trade if you're looking at it. Go long gold and basically short silver would be a good pairs trade, I think, for a long-term basis, maybe 3 to 6 month horizon time moving it out. Okay. We're going to come back to the Dow in a minute. Corn here. Corn is at a verge of breaking down. If corn sits there and breaks below this level here, this thing is going to start a major trend on a long-term basis to the downside. So 557 is a major level that this thing has to break. If it breaks it, this corn is going to tank very hard, and does have a potential of coming all the way back down to about 450. So it could have a potential of moving 100 points or so. 30-year Treasury notes. 30-year Treasury bonds. This is bullish trending on both the daily and weekly time frame. However, it's very overextended now, so we're expecting some pullback levels. Pullback level is going to be 149,17 and 147,08. 5-year Treasury notes. This does not look as bullish as basically the 10-year. This doesn't even look good at all, so I would definitely walk away from this one. There's no opportunity there at all. Soybean oil, look at this one. This is being a bearish, trending on basically the weekly, daily time frame. Over here on the daily, we basically have gone down to a major support here, which is basically 48.11. Now the question is what's going to happen here. We're very oversold on basically the daily and the weekly. We need a pullback level. If you get a pullback level, people are going to think this basically is a double bottom and does have a potential of going all the way back to 52.63 moving forward. Soybean meal, this is basically bullish trending on the daily time frame. This is a major support level here at 390. If it could hold here and just kind of consolidate a little, the bulls kind of have momentum back to sit there and start buying this, but that level is going to be key to see if it's supported. If it breaks that support at 390, it's going to go to 356, 350 very easily. 10-year treasury notes are basically trending just like the 30-year. They're bullish trending right now. They are in a basically oversold scenario, overbought scenario now. So just be very careful if you're entering just now. Oats has basically moved a big down move, leg move downwards right now. However, this is not bearish at all right now. It has to sit there and close below 277.44 at the end of the week. If it does, then this does have a momentum to sit there and start a bearish trend next week to the downside. But where it stands this week is going to be very critical in order to determine if this will start a trend. Soybean futures, this is the first time the sentiment has changed to be bearish. However, be very careful in shorting this. Reason why, there's a major support at 1303.38. So if you're going to short it, it's very dangerous. I would actually think of actually buying this right around 1303 on a pullback with a very tight stop to sit there and go long on soybeans. 2-year treasury notes, nothing really there. So we're going to move on. And lastly, wheat. Wheat is doing nothing except consolidating. There's no real opportunity until it could sit there and break the range of 580 by 740. Okay, so that's it for this week. Sorry about that. That's the US bell telling us the markets are closed. Okay, that's it for this week. I hope you enjoyed it. Remember, you could access any of our videos, heat map services, and email alerts for multiple time frame buys and sells at ichimokutrade.com. You could also contact any of our global offices with the phone numbers below. Thank you.